Welcome to Excess Returns, where we focus on what works over the long term in the markets. Join us as we talk about the strategies and tactics that can help you become a better long-term investor.
Justin Carbonell and Jack Forehand are principals at Validia Capital Management. The opinions expressed in this podcast do not necessarily reflect the opinions of Validia Capital. No information on this podcast should be construed as investment advice. Securities discussed in the podcast may be holdings of clients of Validia Capital.
Hi guys, this is Justin. Narratives and stories are all around us in life and in the markets. Today on Excess Returns, Jack and I sit down with Ben Hunt, founder of Epsilon Theory, to discuss how narratives form, how they can influence the markets, and if investors can profit from narrative-based investing. Ben goes deep into narratives and it's a thoughtful discussion on how investors should think about the narratives and stories they are being told and believe in that influence their behaviors. As always, thank you for listening. Please enjoy this discussion with Epsilon Theory's Ben Hunt. Just one more thing before we start. We mentioned a new podcast Jack and Ben are launching with our good friend Matt Ziegler called Breaking News in the Interview. For anyone who wants to subscribe, the video version can be found at youtube.com/@breakingnewspod, and the audio version can be found on the existing Epsilon Theory podcast feed. Thank you, and we hope you enjoy this interview with Ben Hunt. Hi, Ben. Thank you very much for coming on with us again today.
Justin, it's a pleasure. It's a pleasure.
Always nice to have you. We're going to spend most of the time talking about narratives and how narratives influence things and investing in the markets and how investors should be thinking about that. It's something that you and your team at Epsilon Theory have done tons of work and writing on, and there's some interesting new developments actually at Epsilon Theory that I wanted to just ask you about out of the gate, because this is some pretty cool stuff that you guys are doing. The first is your new fiat news, I guess, tool that's in beta. I'll let you speak to that for a moment if you'd like to. And then also a development with Jack, yourself, and our good friend Matt Ziegler. You guys are getting behind a new podcast called Breaking News, which is very cool. And I'll let you talk about what the mission of that is too. So those are two interesting developments. I'd like to hear, out of the gate, what you guys are doing.
Well, thank you. And yes, so the topic of narrative is near and dear to our hearts here. It's something that I've spent I can't believe I'm saying this. I'm 59 years old, but I can now. My professional career studying narrative going back, 35 plus years now. And we have developed a new toolkit. It's a way of seeing, measuring the actual language that, in this case, mainstream media uses around a story. What do I mean by that? I mean that in the same way that there are a limited number of scripts in Hollywood, there are only, a couple of scripts that are redone over and over and over again. It's the same way with everything we have in any media, any information we consume. There are a finite number of ways to sell a story to you. And so what we're trying to do with fiatnews.com is to show people this, show people directly the specific ways in which a story is sold to you, where news becomes fiat news. We all know what fiat money is, right? I mean, it's money by declaration. Government declares this is money, this is legal tender. Well, so much of everything in our life, particularly news, I'll use that little quotation mark around it, is fiat news. It's news by declaration. It's often an opinion. It's often, we like to ask, why am I reading this now? It's news presented to you. And so that's the purpose of the site. We're really excited about it. It's free for everyone to come and take a look at. And so thanks for mentioning it. Appreciate that.
Yeah, and I'm really excited to be doing the podcast as well. That was good luck for me. Like, I just happened to have a beer with Ben one day, and I was kind of complaining about the fact that I'm seeing, everybody's polarized these days. Everybody's on both sides. We're being influenced in so many ways we don't even know. And I was like, well, somebody should start a podcast about this. And like, to Ben's credit, as opposed to doing nothing about it, which is what I typically do, like Ben was like, well, why don't we do it? And so yeah, I'm really excited. It's called Breaking News. It should be out.
Who better than us?
Yeah,
Jack,
exactly.
Right?
So yeah, and I love what you always talk about with Epsilon Theory, because, you talk about things having to come from the bottom up instead of the top down. And that's like, all of us can kind of look internally and say, we could just look at these big problems and say, well, there's nothing I can do about that. Let's move on with my life. or we can work from the bottom up and we can try to make our own little dent in it. And I think that's hopefully with this new podcast, we'll make our own little dent in it. And for me, I'll learn a lot. Like just in the, when people will see when the first episode comes out, like there were articles in there that I didn't really understand, like how it was being influenced, and you were able to explain it really well. So for me, it'll be a learning experience, in addition to a lot of other benefits.
Well, you're right about that, Jack, that we are being pushed apart. It is intentional, and we are being pushed apart in lots of different ways, but it's a finite number of ways. And it's done through language. It's done through words. And once you start looking for it, once you sensitize yourself to saying, oh, those words, and these are words used by the left, they're used by the right, they're used by everyone. Once you sensitize yourself to the words, it helps you step back a little bit and maintain that autonomy of mind that is intentionally taken away from us, but we can absolutely reclaim.
Well, I will be the first subscriber.
Well, thank you.
I'm
Wonderful.
looking forward to it. So Ben, let's start with hearing your best definition of what a narrative actually is. Because, most of our audience are fundamental investors and factor investors. I mean, that's what we're kind of known for. So, how do you define a narrative?
Oh, it's a story. It's a story with a beginning, a middle, and an end. A narrative is a script. It's a story arc. We tell ourselves the same stories over and over again. We call them narrative archetypes. And that's a very, I'll say, common thing to say if you're talking about literature, if you're talking about movies. I mean, I mentioned before about there are only, a few movie scripts out there. That's actually really true, right? There are only a very finite number of scripts. Change some of the, characters around, but it's a very finite number. And the fact is, we do the same thing in investing. Right? There are a finite number of stories that we tell ourselves about stocks, about sectors, about markets, about entire economies. And we tell ourselves these stories and use the same language over and over and over again. So what we're trying to do at Epsilon Theory is to measure this, show people how anyone can start recognizing the story arc behind the news. That's what we mean by a narrative, and that's what we write about, and that's what we try to show people.
I mean, you mentioned you've been doing this for almost 3 decades. So, I'm curious as to what was the initial thing that drove you to really embrace this and have this be, one of the core principles and things that, you've studied and you've built your work around?
My life around, frankly. I started as, well, it's the oxymoron of political science. I forget who was it. Maybe, Peter Thiel, who I've got no love for, is saying that, anything that has to put science in its name is not really a science, right? And I think he's probably right about that, honestly. But political science, right? It's it applies principles of science when it's done well. And at its core, though, right, any of the social sciences, and this absolutely includes economics, it's not dealing so much with structured data, right? You're not in a lab like a physics lab where you're taking very fine measurements and you're replicating those measurements over time. We're dealing with human beings and human behaviors. And so much of what drives human behaviors are, in my view, everything that drives human behaviors is the stories we're told, the unstructured data, not the structured data, the unstructured data, the words, the things we hear, the things we read, the things we see. And so, my research as a tenured professor for 10 years, is really a whole other lifetime ago. My research was on the way that governments use words to convince, cajole, encourage their citizens to get behind the riskiest thing that a government can do, which is go to war. So the dissertation, the book was called Getting to War. And what it was examining, again, and trying to do it in a scientific way where you're actually setting up, okay, here's how we're going to measure it. Here's the data. Here are the evaluative techniques we can apply to this. I was looking at the United States, going back to the late 19th century. I was looking at different countries, different languages, different forms of government. I was looking at the editorial pages in the newspapers from these countries. And I was looking at the way in which the editorial page of the newspaper that was most closely associated with the government in power was writing editorials that used language to say, this is all, ain't it awful what this other country is doing to us, and we should do something about it. So, that was my start, because, we talk a lot about investing, and we're going to talk a lot about investing here on this podcast, in the way that we tell the same stories over and over again, the way that the words focus our attention on something and change our behaviors on something, to buy or to sell. Well, all this applies in politics also, not just for who to vote for, but also in these life and death decisions of nations deciding to start violent conflict with another nation. So that was my start. That was my start in all this. And it's, we didn't call it natural language processing back then. We didn't call it, language models back then. I worked on a digital equipment mini frame, which most people won't even know. DEC was a big company back in the day. We programmed in Fortran and Pascal, and I'm not quite at the computer punch card time period, but I came just right after that. And so it's been a revolution. There's no other word to describe it, in what's possible for the sort of analysis I was doing 35 years ago. It's been a revolution over the last 5 or 6 years. A revolution in two respects. The first is big data. I was hiring grad students and undergrads to go into the bowels of a library and read microfiche. And do you speak Spanish? Oh, great. So I want to put you on, El País, and we're going to, you're going to translate these editorials for me. At our firm, we get overnight everything that's published in the English language everywhere in the world, about finance mostly, but really about anything. It's a direct feed to Dow Jones, a direct feed to LexisNexis. It's not cheap, but it's not that expensive either. To get everything, to get all of it, every transcript, every website, every publication, all of it. But that's not even the biggest change. The bigger revolution is what I'll call big compute, which is our ability to apply these algorithms that were developed 30 and 40 years ago. The network graphs and the math that we're using today is no different than the math we were using 30 years ago. The difference is the scale and the speed with which we can apply it, right? Because these questions of natural language processing and what goes into like developing a language model, it's actually not a complicated algorithm. It's really not. It's just massive scale. You need to do trillions of comparisons, and you need to do that in a second, half a second. So the ability to tap into these cloud computing centers and to get, as much processing power in the same way that I can get as much electricity as I want by just plugging into the wall, that's what's really changed things. So there's been a revolution in our ability to understand scientifically narrative and the way it impacts our human brains. It's been a revolution in our ability to evaluate this just over the last 5 or 6 years.
Can you talk about how the life cycle of a narrative works? I mean, I assume there's pretty repeatable patterns there. I mean, if I think back to inflation, in April 2020, nobody cared about inflation. And then we got to a point that everybody cared about inflation. And then there probably will be a downside on the backside of that. So can you just talk about how that works, like the life cycle of a narrative?
Sure. I mean, again, I'll point people to, well, this time not movies, but a TV show, right? I watch a lot of TV. People say they don't have time for TV. I say you make time for TV. So Law and Order, 23 seasons, I think now. There are of the core series, there are lots of spin-offs, but the core Law and Order series, there are I think about 600 episodes that have been filmed. I haven't seen all of them. I've seen a lot of them. But what I can tell you for Law and Order, for those 600 episodes, there are only 12 scripts. Not only are there 12 scripts, but each script is a 3-act play. In fact, every script of every scripted TV show, every movie that the three of us here have ever seen, ever, is a 3-act play. There's a structure to it where you have what's called rising action through scenes through acts 1 and 2. The rising action peaks 1/3 of the way through Act 3, and then you have what's called declining action. It can still be a lot happening, but it's not building up to the epic climax, right? The last parts of last half to 2/3 of Act 3 are declining action. You have what's called a MacGuffin. Anywhere between 1/3 to 2/3 of the way through Act 1. This is the object of desire, the thing around which the plot develops. In Law and Order, you can always tell that there is a presumably tangential character, right? So the crime's committed, it's investigated. A character is introduced halfway to 2/3 of the way through Act 1. It's a family member, it's a neighbor, it's an associate, someone who is apparently not directly involved with the crime. At the beginning of Act 3, that tangential character is reintroduced as the pivotal character. You can often tell, that there will be a recognizable character actor who plays the part of this tangential character introduced 2/3 of the way through Act 1 to reappear at the beginning of Act 3 to be the major character. Every episode has this. All 600 episodes. There are 12 scripts, 12 kind of basic plot devices that are followed within a 3-act play structure. Rising action, climax, declining action, and this character is always introduced at exactly the same point of time to be reintroduced as a pivotal character later in the play. The point with going all through all this is that these structures have been developed down to a science, a literal science, in Hollywood. The same structures exist for the stories we tell ourselves about, pick a sector, the technology sector. Pick a stock, Microsoft. Right? Pick an investment style, value investing. Right? There is a beginning, a middle, and an end. There's a 3-act play structure to every story we tell ourselves. There are markers at each of these points. It is possible to identify the change in language that marks these different points. That's what we mean by tracking narrative, understanding the life cycle of a narrative. It's a little different from the movies, right? So in the movies, you've got one script, you've got one movie that's playing for you. Here in investing, we've got 25, 30 different movies playing simultaneously, right? It's not like there's only one narrative happening. There can be something that dominates our attention, like inflation today. That matters. We are looking at, as investors, typically, a couple of dozen movies simultaneously. Each of them has its own script. You're at a different point in the life cycle of each of them. And what we can all do to become better investors is just to recognize that this is playing out. Just to recognize it. to maintain that sort of critical distance and not to accept any of these movies or these scripts that is playing for us simultaneously as the God's honest truth. That's what we're all about in our research at its core, is showing investors how this process works. You can go down this rabbit hole as far as you like, but at a minimum, our goal is to have people see the world differently, kind of see beyond the news, and to understand that there's a story arc and there's a motivation behind the patterning of all the information we're presented as investors.
Is there like a point in the life cycle of a narrative where it's most investable? Like I would think when Goldman Sachs is telling all their clients and it's on the front page of the Wall Street Journal, it's probably not that time. But is there a certain period where it becomes...
Oh, it's investable, but you want to go short.
Yeah, okay.
No, I'm quite serious. No, it's so... I was a short seller in a prior, with my long short hedge fund. That was my book. I was a good short seller because I'm wired to be suspicious and to see the flaw in all things, trying to get away from that. But don't call it shorting, call it being underweight, right? So yes, the basic idea of all of what we like to call is narrative ARB. That's the strategy we're talking about, not stat ARB, which is using structured data. Narrative ARB, looking at the life cycle of where you are in a narrative and trading on that basis. This is not long-term investing. It's really not, right? But it's also not fast twitch trading either, because the life cycle of a narrative is typically, it'd be a very quick narrative that only runs for a couple of weeks. Typically what you see in a narrative, say around a sector, a financial sector, and we can talk about some of these narratives specifically, but they'll run on for it'll take a couple of months to build, a month to plateau, and then a couple of months to decline. But I promise you, there is that pattern. They build, they grow, they live, and they die. Why? Because the business of Wall Street is the same business as Hollywood. They are storytellers, because it is through stories that we pay attention to something, that we buy something, that we sell something, that we transact. The business of Wall Street is flow. The business of Wall Street is to get you to transact. And how do you do that? Through storytelling. So there's this ebb and flow of new stories. What do we want you to buy now? It's a new story. So yes, you track. Like I say, you can go down this path as deeply as you want. We go way down this path. We don't look. I have views about fundamentals in the world. I think they're smart, but who the hell cares, right? I mean, we're all smart guys, and it doesn't do you a lot of good, my opinion. So I don't even try to have an edge on fundamentals. I don't think it's possible to have an edge on fundamentals. My belief. Where I think it's possible to have an edge is understanding where you are on the life cycle of these narratives, because so few people try to look at that. We can all do it to one degree or another. And yes, Jack, to your question, you want to be overweight something in the early stages of the narrative, when the drum beating is just starting up. You want to ride that wave up, because price follows narrative. Say that again. Price follows narrative. Price can create narrative. Don't get me wrong, it absolutely can. It can reinforce narrative, and you can track it and you can measure it. But what you want to start doing, you want to be overweight something as the narrative is building. And once, to your point, once you open up your morning Bloomberg email and it's saying, everyone is excited about what's happening in the financial sector or consumer discretionary, that's the time you want to fade. That's exactly the time you want to fade. When it is spread so that everyone's talking about, consumer discretionary. Looks pretty good. Everyone knows that. That's when you want to start fading it.
Yeah, I was thinking the other day about narrative and sentiment and positioning. And I would think narrative drives sentiment, which drives positioning. I mean, would that be kind of the way to think about it?
I hate the word sentiment.
Okay.
Just get that right.
So I'll use the
there.
word I can't use.
No. But this is critically important. I'm so glad you used that word. Because when you talk to people about narrative and narrative archetypes, let me step back a second. If you ask somebody what is narrative, people think about sentiment. They think about, oh, are people using mean words or nice words to talk about something? Go on to Bloomberg, go on to your terminal and talk about, type in, narrative analysis of whatever. They'll show you a heat map. They'll show you the nice words and the mean words that people are using, and that the frequency of mean words versus the frequency of nice words, that measures sentiment. I got to tell you guys, it's bullshit, right? It's not about whether you're using nice words or mean words. It's about the story you're telling. It's about the story. I can't, if there's one thing that we think of as our intellectual property, it's this, and I'm giving it away for free, is to think about narrative, to think about words and their impact, not like we're some ant that responds to a mean word or a nice word. It's not mechanistic like that. It is mechanistic, but it's about how compelling is the story. Are they tapping into one of these archetype stories that grabs us? Oh, there's been a management change. Oh, this person had a great deal of success at this previous position. The old management was, the old king was. This is one of the oldest stories in human history. The king is dead. Long live the king. And I'm just telling you guys, we are, and I think you see this a lot of times in value investing, right? Oh, here's our catalyst. It's the story of the management change or the story of this event. There's always a story to be told. An effective salesperson, and Wall Street's very effective at selling, will always find a story, and they get very good at using the words, the language to present that story to you in a way that you will find demands your attention. That's what Wall Street's trying to do. They're not trying to get you to say, oh, these nice words you use, that makes me want to buy it. That's not how it works. It's a compelling story to focus your attention on that stock or that sector. That's what changes our behavior. Whatever kind of investor we are, it's the effectiveness of the story.
Do you think this is an investing factor? Like, one of the things I was talking to you about when we had a beer is, like, if you look at a lot of the definitions people use to define what's an investing factor, and you probably have heard all the P's, it's persistent over time, pervasive across asset classes, it's robust in how you define it. Like, it seems like it does meet a lot of these tests. It seems like narrative might meet a lot of the tests of being like an investing factor.
Meets them all. I mean, we launched an index with UBS, a little over 3 years ago, for, narrative analysis. It's a, sector rotation thing. And, I could talk about this because it's a publicly, Bloomberg ticker and all like that. But it's a factor. It is absolutely a factor. And the wonderful thing about it is we spend a lot of time working on this, right? $10 word alert, right? It's orthogonal it's uncorrelated to any other structured data factor we can find. You would think it would be correlated with momentum or trend, because just as I described a narrative as having a sine wave, right? It grows, it peaks, and then it dies, and then it comes back. It does have that momentum equality to it, but it comes before price momentum. It's a signal of price momentum. It's anyway, so this is why we are so excited about all of this notion of narrative arb, because it is a factor, right? It is a measurable, persistent behavioral factor in the same way that trend following, right, is my view, a factor, a true real thing that exists. I think that trend and momentum is a true real thing. Is narrative.
This is something I assume you could test over pretty long periods of time, right? I mean, our news articles have been out for a very long time. So is this something you can test pretty far back historically?
Yeah, it is. You don't have the same ability to go back, decades like you do with structured data. So we can take it back back to about 2005. Before then, it's harder to get the big data archives that you need to do the unstructured data analysis. A lot of things have happened since 2005. And if you look at the effectiveness of this narrative factor, what you find is that, all right, prior to 2009, it works. Right? I mean, and yeah, we've published on it, and it works. It works fine. Since 2009, it works better and better as a factor every year. And I think that there are three big reasons for that. The first is, I want to hold up my dopamine machine. Right, I'm holding up, if you're just listening to us, I'm holding up my iPhone, my smartphone. Ubiquity of these devices that we use to absorb messages and narratives 24/7 has been, in my view, an enormous driver of the role of narrative, the increasing role of the narrative factor in investing, the increasing efficacy. We subject ourselves to this all the time. It's the last thing I look at when I go to bed, and it's the first thing I look at when I wake up in the morning. I mean, that's sad and pathetic, but I think a lot of viewers, listeners are the same way. So that's one, right? The ubiquity of information all the time. Two is and I'll say related to the device, is the spread and ubiquity of social media. So Twitter, for example, it was around in 2007, but not really. The ubiquity of the delivery devices and particularly the social media content is crucial. Related to social media content, I think even more important than social media per se, is the change in media structure, not just in this country, but the world. So by that, I mean it's the development of 24/7, I'm using the air quote sign, news channels. This is crucial because if you just look at business media right now, so CNBC, Bloomberg, 24/7, again, financial news organizations. But it's not just those two. Wall Street Journal and the FT have similarly become 24-hour new financial news organizations. Right? The Wall Street Journal is no longer something you get delivered to you in the morning, and that's it. The Wall Street Journal is something that most of us in this business, we're looking at all the time. All the time. So those are the big four in terms of the financial news: CNBC, Bloomberg, Wall Street Journal, and the FT. These 24/7, again, financial quote-unquote news organizations. I'm putting it in parentheses there, the air quotes, because it's impossible to have enough truly news, informational content to fill a 24/7 content organization. So what fills the time? What fills the time are narratives, are the list of speakers and articles that are presented to present an opinion as news. It's absolutely 99.5% of CNBC content. It is, they have somebody on to present their opinion about something as if it were news. That's a structural change in American in particular, but global media also. That's a structural change in media that absolutely drives the efficacy and the importance of the narrative factor. There's a third factor. So far we've got, devices, the delivery devices. Second, we've got a structural shift in media. And the third is a behavioral, I won't call it a shift, a behavioral expansion of the use of narrative. What I mean by that is this really, I think central banks are the best example of this. So Ben Bernanke, when he was leaving the chairmanship, Fed chairmanship, was at the end of 2012. He gave his valedictory speech. And it's interesting, the last speech you give is when you often speak truth. Right? So George Washington, his valedictory address was, beware of entangling alliances. Dwight Eisenhower was saying, beware the military-industrial complex. I mean, when General Dwight Eisenhower tells you to watch out for the military-industrial complex, I mean, you might want to pay attention to that, right? Well, Bernanke, in his final address as Fed chair, he said, well, last few years have been pretty tough. We had a toolkit of short-term interest rates. We took those to zero. And it wasn't enough. So we instituted our extraordinary monetary policies of large-scale asset purchases, of buying stuff, portfolio channel transmission, all the lingo that says we're going to buy stuff and we're going to have an impact on longer-term interest rates. Right? That's why they do it. He said that wasn't enough. We had to develop a third toolkit, which goes by different names. Call it forward guidance, call it communication policy. But at its core, what forward guidance is to use our words as a tool. To use our words not to reflect what we might actually believe or think, but to use our words to try to impact investor behavior. What we might call lying under other circumstances. and he said in the slide stress, oh my God, this is what saved us. From their perspective, from the Fed's perspective, right, of avoiding a deflationary crisis. He said this is what saved us. Now, more recently, it's been pretty clear they've kind of created a Frankenstein's monster, meaning that their words become everything, much more important than what they actually do with the balance sheet, right? Arguably more important than what they do with short-term interest rates. But it's the guidance, it's what he says at the press conference that moves markets, not whether they, paused or hiked rates by another 25 basis points. It's, did he sound hawkish? Did he sound dovish? What's the messaging here? Point being that in the aftermath of the great financial crisis, everyone learned this lesson. It's a lesson that politicians knew a long time ago. But when central bankers adopted the policy of forward guidance, of using their words as a storytelling instrument, and they realized, oh my God, this works. Everybody's in on the act now. Every CEO is a storyteller. It's not, can I get an additional, turn of leverage out of this company? It's not, oh yeah, we've got our Malaysian plant, we increased the operational efficiency, our gross margins were up by, 200 basis points. Whoop, whoop. That ain't it. That's not what drives the stock. What drives the stock is getting up there and getting on Kramer or showing up on CNBC and telling so it's those three things that we think have been responsible for the growing efficacy of the narrative factor over time. A change in the way we assume we ingest content, particularly through always on these dopamine machines. A change in media structure, growth of social media, but especially the growth of 24/7 always-on news channels. And third, the incredible success that central bankers had with using storytelling to the point where it's now adopted by every financial actor.
I was just going to add this comment and see what you think, Ben, if you think this could also maybe be contributing. In the last 20 years, companies have added a lot more intangible value that doesn't show up. And I'm just thinking, the narrative will capture the story of the intangible value. And so maybe that's part of why this is working so well. Maybe there's a fourth reason in there.
So I'd kind of go the in a related sense, right? So, you're going to get some, intangible value from doing an acquisition. We're going to get, we're going to have the goodwill from this acquisition and we're going to put it here, right? That's all story, my friend. That's all story. Oh yeah, this acquisition, man, it's going to, drive growth. And here's the story around why we did it. Quick example. Company has made a ton of acquisitions. IBM, kind of old school value company. Gina Romandy, she couldn't tell a story to save her life. Not to save her life. And it's why, my view again, I think she was a very poor CEO for this era, for this modern age. And there are a lot of them out there. We could name some others, right? But she's just, for me, the poster child for this. Because, this was an investment strategy you had, right? Where you can be long IBM 350 days out of the year, but when earnings, the 4 earnings announcements a year, man, I want to be short IBM for a day. I just want to be short IBM for a day, because we did a lot of work on the data on this. IBM does fine, except for those we call them the days of theater, right? Where you get out there and you have to tell a story, and the stock reacts typically with some ball, right, on the day after earnings. Gina Romandy couldn't tell a story to save her life about all those acquisitions they were doing. Watson, right? They were doing freaking AI. Is marketing AI, right? Watson was crazy, but they couldn't tell that story to save their lives. Contrast that with Mark Benioff, the CEO of Salesforce, a company that, well, maybe they'll have a little bit this year, but for the last 25 years, they don't have any net income. They don't have any GAAP earnings. None. It doesn't exist, right? But man, could he tell a story about free cash flow. Man, could he tell a story about, oh yeah, at some point, yeah, this is going to be profits. It never is. They have a business model that does not allow them to be profitable, right? It allows them to sell lots of software with a recurring revenue base, and reward their salespeople for all that they move out the door. But it's a business model that doesn't allow that to trickle down. And it would be a trickle to shareholders, but it didn't matter for the stock, right? It didn't matter for the stock. Salesforce is just the exact opposite of IBM. So over this 10-year period that we were tracking, you could, and I was often in my former hedge fund, you could be short Salesforce every day of the year, except the days of theater, the days where Mark Benioff would get up, do his song and dance about pro forma net revenue growth, whatever the hell that is. And I say that intentionally because it's whatever the hell Mark wants it to be. Pro forma net revenue growth, right? It's a totally made up thing. But if the 4 or 5 axes on the stock, the 4 or 5 sell side analysts who are the names on the stock, if they buy into the story also, and they all do, then I'd be short the stock and I'd be listening to the earnings report and I'd think, oh my God, what a disaster of a quarter. I'm finally going to get paid on this short. No one could listen to this song and dance and think it was anything else but a disaster. And then I'd wake up and I'd see coming over at 7 or 7:30, what's his name at JP Morgan, who was, would put out his piece saying, woo, look at that pro forma net revenue growth. And I go, oh shit, I'm gonna get my teeth kicked in again. So I learned I could be short Salesforce every day of the year, and typically I was, and it did well. But you get out of the way for a showman when he's putting on a show. That's the demarcation of a good CEO today, an effective CEO today for shareholders. Can they tell a freaking story? Some can, some can't.
I was thinking when you were talking about like the creating of these terms, what is the one Powell has? Is it like super core X housing or something? Like you come up with these measures, I guess, that kind of support what you're trying to do. It's interesting. Like when you're looking for it, you see it all over the place.
When you start looking for pro forma measurements, you see them everywhere. He's exactly right. And in the mouth of a poor storyteller, they fall flat. In the hands of the mouth of an effective storyteller, they can transform a company. Look, I have a very expansive view of what managerial effectiveness is. And it's not, for a value investor, the traditional notion of what an effective management team is. My strong view, you should think of this as value. Right? It is the effectiveness of telling a story of your CEO, because that's what a CEO is there for with a large public company. They are there to tell a story, period, full stop.
And going back to your point about the Fed, like I was thinking back earlier in my career, like you would have the surprise 50 basis point cut or something like that. Like that was actually could be a thing. But now they've managed this to the point that it's like you're putting out the transcript and you're crossing off two words and they replace these two words with these two words. And like that's what's moving markets now. I mean, that's what we're looking for.
This is the Frankenstein's monster that they've created, so that the words are very effective, but they also become a straitjacket. They absolutely become a straitjacket. And you saw this not with the Fed meeting this month, but the Fed meeting last month when they paused. They paused, and you saw the dot plots, and it was like, what do you mean you paused? Everything from your internal deliberations should have hiked. You're saying you're going to hike. They did hike this time, but why didn't you hike last time? They didn't hike last time because they had hiked after giving all this guidance that they were pausing. Can you imagine the freak out? I mean, it would have been an off 5%, 500 bips S&P 500 day. Absolutely, it would have been. They've created their own prison, which frankly often happens with storytelling. It happened with Salesforce and Benioff as well. Right? Last year, his story, ooh, look at that pro forma net revenue growth. Who cares about profits? That story broke, and Salesforce got killed. And so Benioff absolutely changed his story. Listen to what he talks about now. He's not talking about pro forma net revenue. He still does. He can't help himself. But he changed the story to make Salesforce a profit story. To make Salesforce a profit story. And that's what I mean by a master storyteller. The men and women, God bless them, on the Fed, none of them are master storytellers, right? There are no Ginseng Wangs there. There are no Mark Benioffs there. They're not even Mark Zuckerberg. I mean, Zuckerberg's the same way, right? Think about Meta. Last year, destroyed the spending on metaverse. That stock was wrecked. And what did Zuckerberg do? He changed the story. We're going to cut these costs. We're slashing this. We're going to tell the story of profits again. And that's what a good CEO today does. They tell a story effectively. And when the old story is not working, they pivot to tell a new story. That's it.
It was interesting. I was listening to Patrick O'Shaughnessy's podcast recently, and he had a venture capitalist on, and they were talking about this exact idea. Is like it was like the switch in the VC world from the growth story to the profit story. It was like a switch flip. Like they're like, we saw everybody was talking about the growth story. Now nobody cares about the growth story, and everybody is completely shifted to the profit story. And like the right answer is probably somewhere in the middle, I would assume, eventually. But it's amazing how fast that.
Well, it's a really tough question because it's hard for non-mega cap tech stocks to make that switch. And it's even more difficult for non-public, right? Still, early, mid, late, growth stage stocks, non-public tech stocks to make that switch. The reason being is that value investors don't invest in venture. Value investors don't invest in high-flying tech stocks. It's not their language. They don't speak that language. Right? There's a language to growth. And I mean this in a true language, right? So growth investors speak to each other with a certain language. Value investors speak to each other with a certain language. The two rarely mix. There's an inflection point in tech stocks that they reach a size where they've got all this freaking cash and they can't grow the way they could before. So it's been very difficult for these mega cap tech stocks to continue being attractive to a growth investor, to keep speaking their language. They've all found master storytellers to tell that story in a language that growth investors appreciate and they want as a story they get, so it's kept on working. With rising interest rates, nobody wanted to hear that story anymore, and that story didn't work. It still didn't work. It still doesn't work. Non-mega cap tech stocks. But mega cap tech stocks are, at their heart of hearts, they already are value stocks. Right. They really are. They can change these levers like Meta does or Microsoft does. They still want to tell a story that appeals to the growth investors, but they actually look and feel more like a company that they can tell a value story also. And that's what these mega cap stocks were able to do. And you see the results. You see the freaking results. It's funny, once you start seeing the world through this lens of language, are you telling a story that appeals, that are you using growth words? Are you using value words? What audience are you using growth words to? What audience are you using value words to? Once you start looking at that way, you think, it's pretty eye-opening. So your point, you start seeing it everywhere.
Yeah, for me, but when I listen to a podcast with a VC, I don't know what the hell they're talking about half the time. They're using all these abbreviations and I'm the value guy with the value words, and I don't even know what they're talking about.
What's the preference stack here?
Yeah.
It's a different language. And once you start thinking about that as in a truly linguistic sense, like the difference, but how did the Indo-Aryan language family evolve into Romance languages and Latin languages? There's Finno-Ugric over. Some of those interesting and, to my world, useful analysis on understanding how we talk to each other in markets actually comes from this kind of very old school research in linguistics. Once you start thinking about it this way, it's pretty mind blowing how it you see it everywhere.
Just one more for me before I hand it back to Justin. I'm wondering, is there anywhere, as you kind of work down the stack, is there anywhere this works better or worse? If you think about asset classes, sectors, individual securities, does it work everywhere?
It works everywhere, but it absolutely works better with the more people are telling a story, and the more people care about storytelling.
Higher level?
So what that means specifically is the narrative factor works a hell of a lot better on a mid-cap tech company that's got 10 analysts following it and gets a lot of airtime on CNBC than a large cap industrial that's got 2 analysts following it and nobody ever talks about it. That's what drives narrative factor. It's how much is it sold? How much is it talked about? So, rough rule of thumb, because multiple is a story. Right? Multiple is a story. Sorry to break it to everyone, but there's no natural multiple that means anything. Right? Is a story. So anything that This is what we call them. We call them story stocks, right? You got something. I used to use kind of a 20x PE multiple as being a story stock, but now it feels like everything's at least got a 20x. But that's kind of my basic line, right? I mean, if you've got a multiple 20 plus, you're a story stock. And this works better than on companies that either don't have a multiple or they don't have coverage. Right? So that's where the narrative factor works, is on companies that have coverage. And by the way, who has the most coverage than the mega caps? Which is why, again, I believe their factor, the mega cap tech factor, brothers, I believe that is the narrative factor right there.
Just a few closing questions here about where you see things going. One of the interesting things that I was reading the FAQ on Fiat News, and you guys were talking about how you might have a companion app, but also that there might be like a browser add-in where somebody could be, which is really cool. Somebody could be like reading an article or looking at some content on the internet, and your system would be able to tell them where the biases might be and all the different ways that you rate or look at the information through the lens of these narratives. But I just want to get a sense, do you think, are we on the cusp of, you've obviously developed something, but I don't know, are there a lot of other developments that you see coming down the pipe around sort of this natural language processing and tools that's going to sort of sit on top of information out there?
Sadly, I think most of the developments are used against us, not for us. I think that the ability to choose words that have instill a particular story arc in our minds is just
Interesting.
Words are being weaponized today to a degree I never even thought possible, right? You see it in headline construction, you see it in the text of story construction, the use of these words that like a magic spell pull us in to believe in a certain fact pattern. It's staggering. And that's the only word for it, is staggering. In fact, one of the most effective uses of ChatGPT is to tell a good story. It may not be accurate, right? But storytelling is not about accuracy. Storytelling is about choosing the words that have the highest impact on us. So I think what we're trying to do, and yes, we're going to be releasing a browser native version of this that just highlights the paragraphs you read that use lots of words that fall into one of our 12 categories of ways in which something is sold to you. Again, it's not fact checking. It's not political bias. It's none of that. It's just the words. Are you using a lot of words that are designed to convince you, cajole you, to influence you in a certain direction? That's all. Right? It's designed to let the reader say, maybe I better step back from this a second and evaluate a little more critically the claims that are being made here. That's our, use a Harry Potter analogy, defense against the dark arts, right? That's what we're trying to do. But let's be honest, Voldemort is winning right now.
For investors that utilize fundamental-based approaches to investing, what do you think is the most important thing they should understand or be thinking about when it comes to narratives?
So I was a value investor. Value with a catalyst. The famous, the favorite hedge fund variation on a theme for value investing. That was my faith. I still have that faith. I want to believe that quality matters, right? That a great balance sheet, strong earnings growth, great management. My faith is that matters. My statement is that for the last 14 years, it hasn't mattered a bit. I think if we're being honest with ourselves as value investors, we have to say that it hasn't mattered a bit. Does that mean that I've lost my faith? My faith has certainly been challenged. But for me, I've reacted to it by trying to understand that we absolutely live in a world where we have to understand the value of management, of corporate activities through this lens of narrative. Does it fit our world? So, I think there are different ways to approach it, right? You can go to, I'm going to get out of public markets where narrative dominates, and I'm going to move towards private markets where it still makes a difference. Maybe I move away from, like I was talking about, the names that get all the attention. I'll move into small caps, or I'll move into, a sleepy area, sleepy from in terms of media coverage where narrative doesn't seem to matter as much. I will tell you, I find that those kind of enclaves where narrative doesn't matter as much are harder and harder to find. Voldemort is winning. I do think of the spread of narrative and its importance as the dark arts, as the weaponization of words. So I want to, as a value investor, not lose my faith, but I want to understand that, we live in a world where faith is often not enough. We can't change who we are as investors. We can't change our stripes. But we have to understand, I think, we have not to bury our head in the sand and recognize that the world has changed not for the better as a value investor, and that we have to work that much harder to recognize narrative as an instrument at times of value, particularly in management skills. B, understand that narrative is a real thing, just like trend or momentum is a real thing, and we can't just wish it away. So I wish I had a better answer for you, Justin, other than I'm in the same boat, right? And it's tough to have your faith tested as it has been.
This has been a great discussion around the good, the bad, the ugly of narratives. But we just appreciate you coming on and talking to us and our audience. You're always so generous with your time and thoughtful. So thank you very much, Ben. We really appreciate it.
My pleasure. Anytime.
This is Justin again. Thanks so much for tuning into this episode of Excess Returns. You can follow Jack on Twitter at @PracticalQuant and follow me on Twitter at JJCarbonell. If you found this discussion interesting and valuable, please subscribe in either iTunes or on YouTube, or leave a review or a comment. We appreciate it.
Justin Carbonell and Jack Forehand are principals at Validia Capital Management. The opinions expressed in this podcast do not necessarily reflect the opinions of Validia Capital. No information on this podcast should be construed as investment advice. Securities discussed in the podcast may be holdings of clients of Validia Capital.